You guys need to be cautious in this market. This is not the time to be in any speculative, crazy stocks. This is the time to be in quality. Now, before we get started, I'm not a professional, not a financial advisor, literally just a guy sharing what I'm doing with my investing portfolio, trading options, and hopefully you learn a thing or two, but this is just for education and informational purposes, not financial advice. Don't listen to a word I'm saying, just showing you what I'm doing. Okay, let's get into it. So here's the portfolio. We are up really nicely year to date. Wow, 87%, and then 1 year, almost 120%, 118%. That is astronomical gains, okay? That is super good. Now, what makes me really cautious is a few different things. One, gold. Gold price, silver price. We are up like crazy in gold. That's just one thing. There's a few different things that are setting off little red flags. Gold price. Let's look at silver spot price, right? Look at this. Silver spot price, $54. That's crazy. So metals are spiking. Metals are spiking. That's not good. It's not normal for gold and silver to spike that high, that fast. We are up from a lot. Let's just take a look here. Okay. Basically since July, $36 to $54. Let's take a look at the 1 year. 1 year, we're about $30 to $54 for silver. You got to be kidding me. Okay, now let's look at oil price index. Let's see if this oil, from what I hear, I'm not an expert at this, but from what people are telling me and what I'm hearing, that's pretty much a recession indicator, right? When oil is super low, that's just, again, this isn't just to scare anybody or myself and just say like sell everything. It's not that, but that's a bit concerning when oil is super low. That means something is happening, right? Something is uneasy there. Now, there's also the China trade tension. That stuff kind of seems more like headlines to me. Any tariff related dips, in my opinion, seems like a buying opportunity. But the government shutdown is still in effect. Government shutdown is here. We don't know how long it's going to last. People are just totally brushing this off. And it just, I don't know. I think it's going to materially affect the economy if it lasts, I don't know, another few weeks. If it goes into November and possibly December, who knows? We don't know how long it's going to last. Now, it could end tomorrow. So we don't want to react emotionally. We don't want to, really just sell everything irrationally. We don't want to really do that. But just something to think about, okay? Because there are some real things that people are really brushing off, and my gut is saying that something is brewing, and I don't like it. Okay, so that being said, let's take a look at the portfolio. Now, even though I'm very cautious, I'm trying to rework what's happening now because I somehow kind of got a little bit more concentrated than I actually feel comfortable. I got to be honest, I'm not comfortable right now at all. Okay, but because most of my money is in two positions, okay? We're going to go over that. Now, once again, this is not financial advice, just my portfolio, just what I'm doing. Okay, so a lot of my money is tied up in AMD, okay? Now, AMD has two really big bullish news that came out recently with OpenAI, basically giving them their word to get 6 gigawatts of basically chips, right? 6 gigawatts of data center built. Basically, every gigawatt is about $30 to $40 billion or so, and AMD's market cap is, let's take a look real quick. AMD, where can I find this? Let's see. market cap $380 billion. So if a gigawatt is, let's say, rough number, I don't know, maybe 30 billion, if they got 6, that would be $180 billion for a $380 billion company. That's huge. Plus Oracle is going to get 50,000 chips, and that's huge. Now, because of basically, like, that's just 2 deals. There could be, I mean, AMD, they work with like everybody. All of the people NVIDIA work with, I'm pretty sure they work with AMD as well. And a lot of people are saying that AMD, they just want AMD chips because they need as much GPU capacity as possible. Yes, maybe. There's also tactical reasons they're using AMD chips as well that are going to give them an edge as well, plus the price point. So AMD is really, really bullish, to say the least. So I have a lot of money in there. Now, I sold covered calls originally about 185, then I rolled it to 195. So now I'm stuck in these until November 21st. So it's actually, depending on how you look at it, it's a little uneasy because if AMD keeps going, then I'm kind of stuck in that position and I kind of have to roll to get out, or I have to let go of the shares at 195. So, but there's 2 things. One is that AMD, if it goes down, I have a bit of a buffer. This is the way I look at it. If AMD goes from 232 anywhere closer to 195, it's not going to affect my portfolio that much, actually, and I'm going to have better opportunities to roll and manage this position if that happens, okay? So that's the thing. So if it goes down to 195, it can literally go down like $37, $38, and I'll be totally fine. So I'm not, right, because my contracts are negative, $9,000 of that upside potential loss. But yeah, so any downward move in AMD will actually be good for my option position. Now, because of that, because I had the 195 calls and I saw that AMD had this crazy bullish news, I actually went ahead, I bought 100 more shares. This is why I got so concentrated in AMD. It's because I did the monkey bar strategy. I've coined that term. Basically, if you have a covered call that's deep in the money, but it's still a stock that you believe in for the long term. Now, if I had to let go of AMD shares, worst case, at 195, it's okay now because I bought 100 more shares. I bought more shares right around 215-ish. So now I actually am not letting go of those shares without getting upside on the stock, right? Because the stock went to almost 240, right now it's 232. I have that long side up exposure. So yeah, now I can sleep better at night if I have to let go of those shares at 195, worst case. Totally happy to do that. And I might even do that just so I don't have so much of my net worth in AMD stock. It would be nice to just get some of that cash out and deploy it into other names that I like. So, okay, so that's one position I'm in, AMD. And then the other one is SoFi. Now, my plan with SoFi right now, so I have two $27 puts, and the stock just went down because of some like regional bank related news. I don't think it's really going to affect SoFi too much. Basically, apparently some banks had some bad actors or bad loans that they've been giving. Some banks I've never heard of. So I don't know. SoFi seems to be really good about their underwriting and the type of people that they give loans to. So we'll see what happens, but that was just a short-term news in the banking field. So that kind of brought SoFi down. But I did the same monkey bar strategy again with SoFi, where I had $28 calls, and I closed a couple. Now I only have 4 of those $28 calls remaining. So now the $28 call, if I have to let go of the shares at 28, that's okay because I went ahead and bought more shares. I think I bought about 400 or 500 more shares of SoFi, right around $27, $28, because I wanted to have that exposure before earnings, just in case. Now, this is a little bit of a riskier play short term because I want that exposure during earnings. Now, most people, they avoid the earnings. For me, right now, again, not recommending this, but I'm going to take the risk. I think they're going to really have good earnings. We'll see what happens. But SoFi, just They always beat and raise guidance, and they're a phenomenally run company, and I really believe in SoFi. Now we'll see what happens, but short term we'll see. But I will be looking to trim the position. If it goes higher, I'll just let go of those $28 calls. Maybe roll them if I see the opportunity, possibly before the earnings. Roll them to $29 or $30. But if I have to let them go, that's totally fine because I truly have a lot of exposure in SoFi for my portfolio size, and also AMD. Both tremendously quality companies, but I feel just overexposed. So it's been giving me a little bit of, a little bit of anxiety, even though I know they're quality companies. Just anything can happen in the short term. So I also have Celsius. I have a call. I'm gonna let those go so I can get some cash. And Dutch Bros is another example. This one has been going down, down a bit. Last week, well, it's been tearing up recently, but it dropped down all the way to about 47 bucks. And then, so what I did, and this is, again, I call it the monkey bar strategy. Basically, the stock is going down, and actually some guy exercised their shares. I basically sold a call on Bros for $62.50. Got assigned the shares, like way early, because it was so deep in the money. Then, basically, I owned the shares. So what happened is I bought about 35 more shares. So what happened here, let's take a look. So Bros, so I only have about 135 shares. Now watch this. So my average price was 60 bucks. Okay. Originally, I got assigned, let's see here. I don't know if I have the history. Essentially, I sold a 62.50 put on Dutch Bros. I got paid about 250 bucks, which was a good percentage return. Got assigned, so my average cost was about 60 bucks. Then, as it dropped to about 47, 48, I was buying some along the way. Got my average down to about 57.78. Okay, let's say 58 bucks. So what I did was I sold a covered call on Dutch Bros for 57.5. And that only expires this Friday. Now I sold this when the stock was about 52 bucks. So it actually rose a bit. So what I plan on doing is selling covered calls above the current what's it called? Average cost. So basically what happened is I lowered my cost basis. Okay? So I lowered my cost basis from 60 bucks to about 57 something, so that I would be closer to that break-even price of selling covered calls at. Now, if it still stayed about 47, 50 bucks, I kind of wish it stayed there a little bit longer so I could buy some more shares, but to lower that cost basis even more. But I'm happy with that because I need the cash anyway. So Dutch Bros is a great company. They have a lot of runway in the future. They're just a little bit expensive right now, the PE. But there's a ton of growth. So I like Dutch Bros as a name. We'll see where that one goes. And yeah, I'm just going to keep rolling that one, or maybe just get the cash out. But yeah, right now I'm in desperate need of some cash as I'm concentrated in two names. So yeah, so anyway, so right after earnings, I'm going to look at possibly getting some cash out or letting go of positions, depending if SoFi goes up or goes down. I'll manage from there. And then my AMD is pretty deep in the money, which is totally fine. Because if it stays above 195, I'll probably just get out at least one contract's worth of cash. Super bullish on AMD. Hate to let that one go. But yeah, now is the type of market where you probably should be having some more cash than I have. So do as I say, not as I do. Yeah, so that's pretty much it. Up until this point, yeah, Celsius, I'm really bullish on Celsius, really bullish on ELF. So when I get some money back, these are some names I'm going to be looking at. ELF, Celsius, really high growth names. Let's see. Yeah, possibly more Bros, but I want to look at really diversifying and then also, of course, holding cash. Let's see. I also have a very small position on SQQQ. I don't know. Let me know your thoughts. If you guys think there's something brewing in the market, I'm really getting a bit uneasy, especially because the government's shut down and they're not really talking about this. So I'm just, yeah, I'm getting a little antsy. Feel like something's brewing. Something's brewing. Also, I'm not sure if I documented, but before crypto actually dropped, I did sell out of all my AVAX position. So that was a like really good time. I sold that on October 3rd. That was before it dropped. I sold it at 31 bucks. And yeah, so that was actually really good timing, but it was totally just luck. I basically figured if the market goes down, highly speculative, risky stocks or crypto is going to go down the first. So that was kind of my deleveraging or de-risking play. Um, yeah, so cool. That's pretty much it. That's pretty much the portfolio. Also going to let these AMDL call, $10 call and $10 put expire. So I'll sell the $10, and then this will expire worthless. And yeah, basically just trying to shore up some cash. I don't know. Cash is a good hedge short term, not a good hedge long term. Very risky long term, but short term, it's really good when you're feeling uneasy and you think something could happen. So yeah, so I'm trying to work to get some more cash, and yeah, we'll see what happens. Hopefully, you got some value out of this video, seeing kind of what I'm doing and how I'm thinking about the market. Yeah, AMD and SoFi are like my most bullish names. So, all right, well, yeah, that's pretty much it. If you guys want to take your options trading to the next level, be surrounded by a group of like-minded investors and traders and option sellers, then hit the link in the pinned comment for the Options Here community. It's absolutely free. We have about 80 members in there right now, and we're growing pretty fast. So it's a good time over there. Would love to see you there. And yeah, take care. We'll see you in the next video.